GameStop. We like the stock. I can't believe this was possible. It would seem to defy logic at every level.
It is the craziest I think I've ever seen.
Members of the Wall Street Bets community had...
In today's video, I'll be answering the question, is the GameStop saga really over? The story of GameStop has been an absolute roller coaster with unreal changes in the company's stock price affecting both retail and institutional investors. It's caught the attention of the entire world, but where do we stand now? Is it really over, and is there potentially more to come in the future? What's going on, everyone? Welcome back to Financial Knowledge. If you want to learn more about finance and investing, make sure to hit that subscribe button and help support the channel. In today's video, I'll be giving you a full explanation about what's happened with GameStop and where we currently stand and where the stock price is likely to go in the future, and if there's any point jumping back on the bandwagon. The story of GameStop has been one of the most unreal things to come to the investing world. A battle of David and Goliath. The little guy, the retail investor, versus massive multi-billion-dollar hedge funds. There's been wins and losses on both sides, but where do we stand now, and what does the future hold? To answer these questions, I'll give you an overview about everything that's happened so far and take you back to before, when this whole thing blew up. This whole saga began when hedge funds were consistently shorting GameStop stock. Shorting stocks is common practice, and it's essentially when a company will make a bet that the stock price of a particular business will fall. For example, a hedge fund will borrow shares of GameStop stock and it's currently sitting at $100, and they believe that the share price will drop. So they borrow shares of GameStop, sell those borrowed shares to somebody else at that $100 price mark, and then once the share price drops, say to $70, they'll buy back those borrowed shares from the person they've lent it to, and then they'll pocket the difference. And when you short a company, you can't just leave the stock that you've borrowed with that person you've lent it to. You have to close your short position, and this can become very risky if the stock price starts to climb. If you sell that borrowed share to someone at $100, the share price could go to $500, $1,000, $2,000. There's no limit to how high it can go, so there's no limit to how big your loss can be. And normally shorting stocks works fine for hedge funds. It's common practice, happens all the time, but this was until a Reddit page called Wall Street Bets found out about this, and then they collectively banded together and started buying GameStop stock in massive quantities, which artificially spiked the share price and caused the short sellers to lose billions of dollars, because they were banking on the fact that the share price would drop, but it started climbing at alarming rates, going up to over 1,000% in a very, very short space of time. And all these hedge funds that were banking on the share price dropping had to close their short positions, and when they closed their positions, more stock was being bought, so therefore the stock price would keep rising. So it was a very negative cycle for all the hedge funds that were planning on shorting this business. So there was an absolute massive amount of buying of the stock, and this was reflected in the insane growth of the share price. Things really started kicking off on the 12th of January, where there was a 57% increase in GameStop share price, and this trend continued for about 2 weeks until the 27th of Jan, where the closing price reached a high of $347 from a previous value of $20 a share just 2 weeks ago. So over 1,600% return on the investment for anyone who was lucky enough to get in early on the GameStop action. It was unprecedented stock price growth, absolute carnage on Wall Street, hedge funds losing billions, retail investors making an absolute fortune. The Wall Street Bets page was going crazy, gaining millions of followers, people posting returns of 40 million plus, paying off their student loans, putting their family members through medical treatment, Elon Musk tweeting about it, Chamath getting involved, CNBC making consistent interviews. It was something that was unheard of before. Retail investors having the power to cause hedge funds to lose billions of dollars, and everything was going well for a good 2 weeks, but then things came to a grinding halt when Robinhood blocked trading of GameStop shares. Once Robinhood put in these restrictions, there was a sharp drop in the share price of GameStop, and there's a lot of potential reasons and theories that people have made about why Robinhood limited the trading of the shares, and I'll just give you an overview about how Robinhood makes a good portion of its money and how this could have been a factor in their decision to ultimately halt the trading of the GameStop shares. Because Robinhood is a zero brokerage platform, they need to find other ways of securing revenue for themselves. And one of these main sources of revenue that they have is selling market flow. Now what this means is when you place a trade on Robinhood, it doesn't go directly to the market. Instead, it will go from Robinhood to something called a market maker. And this is a large financial entity like a bank, an insurance company, or a hedge fund. The reason these hedge funds are willing to pay Robinhood for market flows, so information about what stocks its users are buying, and if they know what trades people are making, they can get to the market first, buy those stocks that people are after, slightly inflate the price, and then sell it back to Robinhood and then back to you. And the inflated price is minimal, something you wouldn't even notice, maybe only a few cents. If it's done at a large volume for millions of trades, it's a very profitable revenue stream for the market maker. One of the main hedge funds that was shorting GameStop stock and ultimately losing enormous amounts of money during this time is a fund called Melvin Capital. They were losing so much money, they needed a cash injection of several $billion. But one of the main groups that ultimately bailed out Melvin Capital is another hedge fund called Citadel. Citadel is one of the main companies that buys order flow from Robinhood. So it's a conflict of interest if Robinhood is being used as the tool to attack Melvin Capital, if Citadel is an investor in Melvin Capital. So as long as people are buying GameStop shares, Melvin Capital is losing money, Citadel is losing money, and Citadel is going to have a harder time paying Robinhood if they keep losing money through Melvin Capital getting attacked. Robinhood wants to protect the hedge fund and ultimately restrict trading, because the more people buy GameStop, the more all the companies involved lose. It's been said this is the reason why GameStop shares were ultimately halted by Robinhood, to protect its partners and ultimately protect its own revenue stream. But another reason that people have is Robinhood allows trading and buying of shares through borrowed money, and there's been an absolute explosion of people buying stocks, and there's enormous amounts of money going into GameStop, and the share price rising isn't based upon any fundamental changes or legitimate reason. Everyone wanting to be a part of the hype, the movement, getting in on profits, FOMO, that kind of thing. If there's such an influx of trading and money going into a stock on borrowed money, it's gonna be a big financial problem for Robinhood once that bubble pops. But once these restrictions were put in place, the stock price fell sharply, over 40% in one night, with a short rally, not quite getting back to where it was at its peak. But over the past few days, it's dropped over 80%. It appears that the bubble has popped. But if you were lucky enough to get in before the 12th of January and hold until now, you'd still be up about 200%, which is a great return. Obviously not as great as 1600, but timing that perfectly would have been slim to none. And this leads me into the second part of the video. Is it really over? And should you buy more shares in GameStop? The short answer, I think, is no to both questions. And my reasoning for this is GameStop really only went up because of hype. People's perception of getting posted on the news, the Reddit page, even a billboard being put up with the Wall Street Bets logo on it. And all these things really play into the stock price going up, instead of a fundamental change like a new product coming out or an excellent financial report that gives investors confidence and a reason to buy into the company. So when a stock goes up 50%, 100% consistently, you can't expect that to continue, and ultimately it will fizzle out and the bubble will pop. It will drop just as quickly as it came up, and it's ultimately what's happened now. Of course, Robinhood's halt on trading would have played a major role in this. I think it could have gone for much longer if that didn't happen. It went on for quite a while, and it's something we've never seen before, and it's pretty cool that we realize now that something like this is possible. Maybe it'll happen again in the future, but for now I think the GameStop saga is over. The likelihood of a further spike is slim to none in my opinion. It's important to remember the risk you take if you choose to get involved in this kind of speculative, virtually gambling situation. You really only want to put aside an amount of money that you can lose. If you lose it all, you have to be completely comfortable with that. So I think that's it for the GameStop saga. It's been a crazy ride. Congratulations to anyone who got on board and was able to make a profit. Hopefully for those of you who got stung, you didn't lose too much money. There's definitely still a lot of support for it on the Wall Street Bets page, and who knows, we might see something similar in the future if laws haven't been put in place to stop something like this happening. As always, I hope you learned something new. Let me know, what did you think of GameStop? Did you get involved? I really enjoy interacting with my viewers. I'd love to hear your thoughts and opinions down below. As always, thanks for watching, and I'll see you guys in the next video.